Hello and welcome everyone to Gold Asset of the Day for the 11th of August 2020, presented by myself, Phil Carr, at the Gold and Silver Club. So right now, gold is trading at $1,950 per ounce. In fact, it's dropped now over 1,000 points since the highs that we saw last week before non-farm payrolls. Today, we have seen Goldman Sachs issue profit taking on both silver and also gold. And we're seeing this tremendous downside slide at the moment for the metals, which again highlights the need here to continue to bank profits as the trades do accelerate to the upside. Make sure you protect those positions as well. We covered that with you in detail on the week ahead commodity report, where you wanted to be nimble. You wanted to make sure that you do bank profits as you go along, protect those trades, particularly ahead of non-farm payroll. That turned out to be certainly the right move, as we have seen quite a considerable sell-off here. Now, we need to keep a very close eye on what the hedge funds and money managers are doing right now. I mentioned on the week ahead commodity report as well, look for buying evidence this week. If we do see these sell-offs that then get bid, that's where you want to be looking out for opportunities. But obviously right now, when you have a very large sell-off to the downside and you're not seeing the markets catch a bid, so where they continue to break down, you don't want to be catching a falling knife. This is where you want to look out for the daily closures. If we do get that close below $2,000 per ounce, which seems to be the case at the moment, this does set up for a potential short-term correction. We know the hedge funds, the money managers, they're booking profits here. We know institutions such as Goldman Sachs, of course, are booking profits here as well. It's been an absolutely tremendous run here. Silver, of course, last month had the biggest increase on record, up over 35% for the month. Gold prices, they had their best acceleration to the upside in over a decade. But as with all parabolic moves here, you are going to see eventually a correction, profit taking, and this is where you need to keep a very close eye on the data and where things are starting to shift in the market. Hedge funds and money managers in the latest week have reduced their overall net longs on both gold and silver here. We're starting to see that acceleration this week to the downside, and keep a very close eye on the dollar index here as well. So if the dollar is starting to break out, if it breaks above that 93.50 zone, starts to make a move up to 94 and 95, that's where it will of course put more pressure on metals priced in US dollars. The gold to silver ratio as well, watch that. So we have broken down on Monday below 70 to 1, but since then it has retraced back above the 70 handle. So you want to keep a very close eye on that. The gold silver ratio, if it continues to break down, this is where gold and silver will find support and continue to move higher. If the gold to silver ratio, however, was to therefore start going higher, this is where gold and silver will be under more pressure. Now, we had that very key level at $1,920 per ounce, which was the all-time highs that got broken the previous week. This will be a major zone as well. So from the sell-off that we've seen over the last few days, currently gold is trading at $1,950 per ounce. If it does roll over again, I would look at that level as well, around 1900s to 1920s. See if gold gets a bid at that level. You want to be watching those levels very carefully. Silver basically came up to just below $30 per ounce last week. Great opportunity to bank some profits. Palladium was incredible for us just yesterday, banking 2,000 points since Friday on that move. So that was just unbelievable. That we highlighted for many of you on the week ahead commodity report. And many of you have absolutely killed it lately. You've done extremely well off the back of these parabolic moves that we've seen in the markets. Really appreciate all of the comments that we get, of course, on the YouTube channel as well. And with that, just bear in mind again that this is where many purely 100% technical traders are going to get chopped up. A lot of their technical strategies are not going to help them in order to bank profits as we go along, protect those trades. And also what you've tended to see lately is many traders have been selling into each rally, getting taken out, and then eventually these retail traders, they will FOMO in right at the end of the move because they can't take it anymore, not having a position on. They'll get right in at the top of the market, such as silver or platinum or gold. And that's where, of course, you see Goldman Sachs suddenly take a huge amount of profit off the table in their gold and silver positions. The retail traders get taken out of their trades, and then we start to see a pullback or a correction take place. So with that, keep a very close eye on, again, the gold silver ratio, the US dollar index here, and with gold at the moment is trading at $1,950 per ounce. I would look at those zones currently between 1900 to 1950. That's where we want to observe how the price action does. That was the previous all-time high for gold that got broken out from. So now we want to see if we do retest that zone, whether that's where we get buying evidence again. So with that, that's been Gold Asset of the Day. And of course, I wish you good trading.